record this for myself. Okay, thanks for joining me. It's a good day to talk, actually. There is quite a lot going on. I'm going to start, I've got the S&P up, which I want to come back to, but I'm going to start with gold, because that one's really on the move. Okay, so gold's had a really good run up. Now, we had a lot of resistance at I don't know if you follow me, but if you're on my YouTube channel, you will have known that I called this move up in gold. I said that gold was going to explode to the upside. Now, mainly, where do we get in? We were in around the 1660 area. We were in around here. Forget why now. I think we'd broken above what I'd seen as a double top. Let me go right back. Double bottom rather, not double top. Where am I? Yeah, here we go. Okay, so it's actually a triple bottom. This is why I got so bullish about gold. Triple bottom is pretty rare. Weekly candle on the weekly chart, you see more of a doji than a shooting star, but a couple of moderate, neutral to bullish candles, and then we had this big bullish engulfing candle here 3 weeks ago in gold. So that to me indicated that we've probably got a triple bottom. And the market should push higher. So for the following week, well, certainly got really lucky because we were getting in around the mid 1660 area, and then the market rocketed like 90 points. I didn't manage to run it that far. I only got up to 1744, I think was where I got out of my longs. But anyway, it's still a great trade. Okay, so gold was looking pretty positive, and it did get to my target. Now, my target and the resistance area, as you can see, are pretty clear. Why I thought this would be a resistance. Market turned around a bit quicker than I thought it would, actually. I thought we'd have more time to get short. Now, taking the peak of December 2020 and projecting it all the way through, joining these three peaks there, we got a trend line at 1789 is the exact value, coupled with the 38.2% fib at 1787. So it wasn't a huge surprise that we reversed from there, although I didn't actually manage to get short. I was waiting I was trying to be a little bit patient, and we literally hit it and reversed. So that's from the weekly chart, that strong resistance level from the 38.2% fib and the trend line just below these moving averages. So let me see, go back to the daily chart. And we are indeed coming back down. So I didn't manage to sell it up there, but I did sell it on the break below. Where did I get to now? Trying to remind myself. What was my break point? Oh yeah, it was 1668. So I was actually using not that trend line there. There was another trend line that I was using somewhere. Oh yes, here we go. I can take that off, and I can put. I'll leave that on actually. It was this trend line here that I was looking at, because I figured that this was something of a head and shoulders pattern. And so once we broke this trend line there, actually that for some reason that trend line showing at 1761, but we were selling it around 1767, 1768 on the break of gold rather. So where can it go? Well, it can go down quite a long way, I think. I think ultimately gold will turn around and go up, because I do think that we are beginning a bullish trend, but we can have quite a big pullback. So well, I've just used some fibs to get a rough idea, just without doing too much examination. Certainly we can get to 1740, 1748, 1746. I wouldn't be surprised to see it's a bit lower, actually. 1720 wouldn't be a complete surprise. But we've called that right anyway, so it does look like there is some room on the downside. Eventually, maybe in a couple of webinars, I'll be looking to buy into gold on a longer term basis, but I do think we're going to get a correction. Now, okay, that's gold. Silver, similar story, not a surprise. So I couldn't actually pinpoint the reason why silver turned around. Well, I mean, 50% fib is all I could really find on the daily chart. So not the most exciting reason. And I personally wouldn't have shorted there, if I'm honest. I didn't see it as a strong enough resistance level. But we did get this big red candle, and then we followed through to the downside. Right, so it's only 50% fib. the break below these two little lows here around 2100. Well, actually, it was 2120 that I took as today's trigger for a sell. Was it? Yeah, just below 2120. Anyway, we broke lower, and it does look like the silver can continue. This is quite an interesting chart. I'm sure you've seen this before. I'm sure I'm not the first one to show it to you, but there is a potential cup and handle here. Where is it now? Yeah. So people are talking about this cup and handles on the, probably easier to see it on the weekly chart. I think that is the cup, is it? And that is the handle. I mean, it's an enormous pattern. It really is huge. If this is what some people are saying it is, then silver is going to absolutely go to the moon in the next few years. But for the time being, I think silver is going to go down. We do have really good support in silver today at 2050, 2040. So we're moving swiftly towards that area now, aren't we? 2050, 2040, that sort of 10 pip area is where we should have some support for silver. I'm going to look at the dollar index now. I see stock markets are plunging as I speak to you, which is pretty good. Good for me anyway. Yeah. I'm actually just going to quickly look at my trading account while I'm talking to you, because I'm short gold and I'm short the stock market, so that's kind of nice. Right, where are we now? Okay, US dollar index. Now, I probably need to show you the weekly chart for that. Do I? Weekly. There we go. Yes. So we had some good support down here on the weekly chart around 105. I'm going to call it 105.20, 104.80. Now we didn't quite get there, to be fair. We got to 105.34. Pretty close. So it looks like, well, that was the big support area for me. And what are we? So far we've got, you know, a moderately bullish looking candle. Sorry. Charts are very dark. Maybe use lighter colours if possible. Okay, are they very dark? I'll try and change it. I can't do it for today, but I'll try and change it another day. So we've got a good recovery in the dollar index off the support level. It was just above the 200-week moving average as well, in fact. So the red line here. So we've bounced off quite nicely. So I think the dollar is still in a bull trend. Well, it is in a bull trend, and I think that was just a correction at the moment. The reaction here will be really important, and we'll see quite how much of we'll see if we get some sort of topping pattern. But I think we do have to probe and do a retest to the upside before the market could go lower, if indeed we have got a trend change. But right now, I'm just going to put some trend lines on as I talk to you. There we go. But right now, I'm going to assume that we're going to get a decent bounce in the dollar. Okay, so on that note, euro. Yeah, now this, I wasn't sure if this would hold, to be fair, either. The euro really was tearing away over the last couple of weeks. Well, no, over the last, since the beginning of November. So only about 2.5 weeks. And absolutely rocketed up to the 200 day moving average, rather, which of course we hadn't seen since, or we hadn't touched since July 21. So that's the first time we've been back to the 200 day moving average. So the red line is the 200-day moving average, and we reversed from there. Personally, I must admit I wouldn't have sold it. The only reason I did sell it, I didn't sell it as we hit the 200-day moving average. I didn't think that was going to hold, but if I remember rightly, yeah, that was a good little indication that we were going to go down. So it was around there that I was looking to get short, and we've broken below the 1 hour, the blue 1 hour moving average as well. So it looks quite negative. I do think the dollar, yeah, is going to see a decent recovery. We'd gone up so much in the euro versus the dollar, and obviously got overbought. And at the end of the day, we are in a bear trend. So I suppose we had to come down eventually. I just didn't think the 200 day moving average was heavy enough, but it was. My moving averages are the 50, the 100, the 200, and the 500. I should use shorter term moving averages, but what I've done here is just try and, because I have to cover 24 different markets, I sort of worked out a one-size-fits-all strategy of analysing everything across the board: Forex, commodities, indices, bonds, everything. So my techniques are pretty simple, which I do teach in a course if anyone's interested. Right. So the euro, Aussie is also looking pretty negative. So it was only Fibonacci resistance. There wasn't anything else up there. I couldn't find a trend line. I couldn't find a moving average. I couldn't really find any. Even the price action wasn't that convincing. But anyway, we had these Fibonacci levels. I'll try and show you how far it goes back. Wow. Okay, that goes all the way back to 2020. So we don't need to worry about that one. In fact, we overrun the. Take that off. But going back to here, we are looking at the DAX, and I'm going to go to the daily chart. Okay, the DAX was fairly simple. I mean, I really don't know what this rally up is. It's one heck of a rally, so strong, straight through the 200-day moving average. If you remember earlier, I showed you how the Aussie and a couple of other markets had hit gold. Hit hit moving averages and just reversed. Well, didn't work here. The Aussie sailed through there, sailed up through 13,550, and we almost got as close to the 61.8% fib, which is at 14,994. We've got the 500-day moving average at 14,520, but we've backed away from there. Today we're below yesterday's low. So we do seem to be moving to the downside, and I think, judging by the short-term charts, that what did I have here? Yeah, just this little break point there, 14,280. We've got moving average crossover on the hourly chart, 50 bouts cross below the 100. We broke below that little trend line there. I had a little trend line up here as well, but that didn't come into play. So once we broke down, we can now head for, where are we? Yeah, that's one heck of a run. It'll be interesting to see what the weekly candle looks like, because this is the weekly chart. Look, you can see how close we got to the fib. When you look at it on the weekly chart, it doesn't look like there's much. We haven't fallen too far from that resistance level at 14,994 and the 100-week moving average at 14,541. So that is why I chose 14,500, 14,600 as my resistance level, but we didn't quite get there. 14,641, 14,461, I should say rather, and we've now reversed. So I personally think that this was a massive short squeeze in the stock markets. It's insane. Firstly, I don't know why anyone would think the Fed are going to pivot. They haven't made any indication that they're going to do that at all. Oh, we just had dollar news out, did we? Ah, great. Well done. Thank you for that. That's good. Okay, I'm not seeing anything. That's the reason for the gold move, is it? Okay, so euro is a little bit off its lows. Yeah, about 20 pips off the lows. Okay, I don't know what the dollar news is, but if anyone knows, let us know. Let me know, please. Let's have a look. Weekly chart on the DAX. Yeah, I'm just wondering if we'll get much of a negative candle. We would have to absolutely collapse to get a bearish engulfing candle. I don't see us closing below 13,400. I just wanted to check that. I'm going to go back to the hourly. Okay, so it does look like the DAX has reversed from a fairly obvious resistance, but didn't even get there. Even the candles weren't that negative. I mean, okay, we've got small-bodied candles, so yeah, it does show that the market is sort of exhausted and more coming into balance. But today's the first red candle, so it looks like it is the start of the move to the downside. Okay, US stock markets look a little bit more negative than the DAX, perhaps. Okay, so what am I looking at here? Yes, I am looking at. Okay, let me try and. There we go. I had a 38.2% fib at 4,000. So this confused me. Now on, was it Tuesday? We had the PPI number out of the US, which was something like 0.2% weaker than expected. And the stock markets just took off. 1.5%, 2%, maybe even a rally in the stock markets. I didn't understand it. Didn't know what was going on. As if that, the markets were behaving as if the Fed had cut interest rates. That was the spike up on the hourly chart on the PPI number, but of course we came crashing down. I think that was that the missile? Sorry, no, that was something else. Anyway, market then came crashing down. Maybe it was the missile in Poland. But look, we broke in the E-mini. We broke what I said to my subscribers anyway was the neckline of Head and Shoulders. So on the hourly chart, I considered this to be the right shoulder, the left shoulder rather, the head, and then some form of right shoulder here. I thought we might break there. We didn't. We had a little bounce to the moving averages and then boom, down. So this is working out as expected, really, getting a bit of a negative crossover on the hourly moving average. But as I said before, all of this based on the fact that we'd run into resistance around 4,000 to 4,020. It was just that little overrun to 40.50 that fooled me on the PPI number. Following day, high at 40.15, so bang in the middle of where I thought we would top, and now we're heading down to 39.21, which is actually, well, the only support level that I would consider be worried about today. 39.25, 39. No, I'm going to say it's 39. Yeah, well, anyway, look, 39.25 down to 39.15 because 39.15 is the 100-day moving average, which did hold here, not accurately, but it did hold here. So it's worth respecting. We start getting below 39.10, 39.00, then that is going to trigger further significant moves to the downside. And I still think the stock markets are in a bear trend. I don't understand why this recovery was so strong. But when you look at it, it really only fits in with the pattern. I mean, this was a very strong recovery. Obviously, this was a very strong recovery. But look how badly we plunged afterwards. Again, very strong recovery here. Beat the previous high. But look at the plunge that followed. Again, almost looks like we're building a bull trend with the second peak so far above the first peak. But then, bang, we crashed. So it really is quite a pattern here of up in a very fast escalator and then down in a lift. And I think that's what we've just seen here. And I think it's just finished. I think we have had, actually, to be fair, although it felt like a very aggressive rally, it was nothing compared to this. Look, this really was so quick and so brutal. Shorts were absolutely annihilated there. And before you know what, then we spent the next 2 months crashing from 43.27 down to 3,500. So yeah, it was a big move. What was that, 20%? So yeah, really, this recovery is nothing special and not out of context of the bear market. Look at this inverse head and shoulders pattern at the bottom of it. Where was it? Was that it? Yeah, look at that. This was the beauty. This told me that we were going to rally. I actually did cover this in one of the weekend webinars, but look at that. I mean, perfect little inverse head and shoulders pattern. Left shoulder, head, right shoulder, straight through the trend line. Okay, retested it and overran it, but then when we retested it here 2-3 times, boom, and then off we went. So that was a real nice pattern. Keep an eye out for things like that. And as I say, on the other end of the scale now, it looks like we've got another head and shoulders pattern. Whoops, what have I done? There, which has triggered a break to the downside. So S&P loves a bit of head and shoulders action by the looks of it. Yeah, and as I say, I do think this is the beginning of a next serious leg to the downside. Now, this fooled me the last time. We broke below the there's a trend line there and the 200-week moving average, but we did not close below it. We bounced back up. Anyway, if we break it this time, and I think we probably will, and I think we'll probably break 3,500 as well, and we could easily see 3,300. But look, that's way ahead. I don't think we're going to be doing that overnight. Although I wouldn't rule it out before Christmas. Question: Euro dollar short sitting above 200 SMA. What's my call? Hang on. Right, you're saying that the euro dollar. Well, yeah, well, I mean that was my. That's the reason I think the euro dollar reversed. And look, although on that PPI number on Tuesday we spiked above the 200-day moving average, that was a massive bull trap because obviously the market then came down to close almost unchanged, fractionally up. Open 32 last year. It's only like 24 pips up on the day. So big bull trap. Loads of bulls caught in that one as we rejected it. We tried it again the next day, but only got up to 104.38 and then pulled back with a small upper wick. And of course today we've reversed and come down. So to me it does look like the euro dollar will continue lower. Does that answer your question?